times of heightened financial volatility, investors are increasingly turning to hard assets, and among these, wine has proven to be an excellent option to consider. In our space, though, we tend to mostly look at the rear-view mirror and marvel at how fine wine has performed in the past decade. However, the past is the past, and past returns are not indicative of future ones. So let's look ahead and discuss the macro tailwinds for alternative assets and fine wine in particular. I'm going to be using the framework of Ray Dalio, the renowned hedge fund manager and macro investor. He identifies 5 fundamental forces shaping global events. First, debt cycle. Governments are extensively borrowing and printing money, leading to unsustainable debt creation. Then we have internal and external peace cycles. We see internal conflicts driven by wealth and value gaps, giving rise to populist movements. Externally, there are rising tensions between countries. Then we have acts of nature. Events such as droughts and pandemics impact global dynamics. Finally, technology. Rapid advancements like AI or blockchain drive major global changes. According to Dalio, these forces interact to create conflicts and financial turbulence. On top of that, there are also increasing concerns about currency debasement and de-dollarization. With this anticipated financial volatility, savvy investors have historically turned to hard assets, one of them being wine. Historical data exemplifies the resilience of wine as an asset class during crisis. Unlike most assets, wine isn't subject to panic selling or to leverage or short-term liquidity generation. But there are other macro trends supporting fine wine as an asset class. Interest rates. It is probable that we have by now reached peak interest rates for the time being, and any rate cuts in 2024 or 2025 will be supportive of fine wine. Then demographics are changing, and today the average age of the wine collector or investor is 40 years old versus 55 years old just 2 decades ago. So during these elevated periods of financial uncertainty, fine wine acts as an effective portfolio diversifier, like gold, for example. Projections actually suggest that the fine wine investment asset class could double by 2027. So because of market participants like Vinesia, fine wine is transitioning from a passion investment into a more structured asset class.